You miss the April deadline. At first, nothing has changed. No one is knocking on your door. Your bank account still works. For the first few weeks, or even months, the only consequence is psychological. You know you didn't file. You know you owe money. This silence is the most dangerous part of the process. Because while you are living your life, a massive, antiquated, but highly effective computer system is quietly processing your data. It matches the W-2s sent by your employer and the 1099s sent by your bank against a tax return that does not exist. The system flags a discrepancy and opens a file. It begins a standardized, automated timeline that does not care about your excuses, your hardships, or your intent. It only cares about math. This is not a story about going to prison. Statistically, very few people go to jail for failing to pay their taxes. This is a story about something much more common and much more intrusive. The systematic dismantling of your financial life, step by step, letter by letter. This is exactly what happens when you stop paying the IRS. Before the first letter even arrives, you are already losing money. The moment the deadline passes, two separate penalty clocks start ticking. It is crucial to understand the difference between them, because one is significantly more aggressive than the other. First, there is the failure to pay penalty. This is 0.5% of your unpaid taxes for each month you don't pay. It's painful, but manageable. Second, and far more dangerous, is the failure to file penalty. This is 5% of your unpaid taxes for each month your return is late. If you look at those numbers closely, you realize the trap. The penalty for not filing the paperwork is 10 times higher than the penalty for not paying the money. The government is incentivizing you to at least tell them what you owe. By going silent, you are choosing the most expensive option. These penalties cap out at 25% of your total tax bill, but that's not the end of it. Interest is compounded daily on top of the tax and the penalties. While this math compounds in the background, the IRS computer, the Automated Collection System, or ACS, makes a move. If you haven't filed, the ACS may create a tax return for you. This is called a substitute for return, or SFR. The computer takes all the income reported by your employer and banks, and it files a return in your name. But here is the catch. The computer does not know if you have children, your mortgage interest deduction, or if you have any business expenses. It files you as single or married filing separately with zero deductions. This creates the highest possible tax liability legally allowed. Once that number is locked into the system, the collection process officially begins. The first sign of trouble arrives in a standard white envelope. It usually lands in your mailbox about 6 to 8 weeks after the IRS assesses the tax. This is Notice CP-14. The language is relatively polite. It states that, according to their records, you owe a specific amount. It provides a breakdown of the tax, the penalties, and the interest. It asks for payment in full. Most people who receive a CP-14 do nothing. If you ignore the CP-14, the machine waits. It is programmed with specific intervals. Roughly 5 weeks later, the next envelope arrives. This is Notice CP-501. The tone is still administrative. It is a reminder. We still haven't received payment. 5 weeks after that, you get Notice CP-503. The language shifts slightly. It is no longer just a reminder. It is a demand. It explicitly states that if you do not pay, the IRS may consider filing a notice of federal tax lien or taking other enforcement actions. At this stage, you are roughly 4 to 5 months into the process. You have received 3 letters. You have ignored all of them. To the ACS, you are now classified as a non-responsive, delinquent taxpayer. The system moves your file from the solicitation phase to the enforcement phase. The next letter you receive is the Notice CP-504. It will likely come via certified mail and you will have to sign for it. At the top, in bold text it reads, Notice of Intent to Levy. This is not a request. It is a legal warning. The IRS is informing you that they intend to seize your property. Specifically, the CP-504 usually threatens your state tax refund. If you were expecting a check from your state government, the IRS is going to intercept it and apply it to your federal debt. But the CP-504 is often just a warning. If you do not respond to the CP-504, the IRS sends the final critical document, Letter 1058 or Notice LT-11. This letter is legally required by federal law. It is the final notice of intent to levy and notice of your right to a hearing. This document starts a 30-day countdown. This is the single most important window of time in the entire process. For 30 days, you have the right to file an appeal. You can request a collection due process hearing. If you file this request, the collection process freezes. This will give you time to negotiate. But if you ignore this letter, if you let the 30 days expire without action, you lose your right to pause the process. You are now fully exposed to the power of the federal government to take your assets without a court order. It usually happens on payday. You log into your banking app to pay bills. You see your balance, or you might see a negative number. The funds might simply be listed as frozen or held. This is a bank levy. The IRS has sent a notice to your bank. By law, the bank must freeze any funds in your account up to the amount of your debt. The bank does not send the money to the IRS immediately. They hold it for 21 days. This is a mandatory waiting period. It is your absolute last chance to fix the situation. During these 21 days, you cannot touch the money. Your checks might bounce. Automatic payments for your rent or electricity might fail. If you do not resolve the issue with the IRS within those 21 days, the bank remits the money to the Treasury. Once it is sent, getting it back is nearly impossible. If you don't have enough money in the bank, the ACS moves to the next target, your income. This is the wage garnishment. This is often the most humiliating part of the process because it involves your employer. The IRS sends a notification to your payroll department. Your HR director or your boss sees it. They are legally required to comply. Unlike a regular creditor who can only take a small percentage of your paycheck, the IRS garnishment is calculated differently. They don't calculate how much to take. They calculate how much you are allowed to keep. They use a standard table of exempt amounts based on your filing status and number of dependents. Anything you earn above that exempt amount, bonuses, commissions, overtime is sent directly to the IRS. This garnishment is continuous. It does not stop until the debt is paid in full or until you finally pick up the phone and make a deal. While they are attacking your cash flow, they are also securing their interest in your long-term assets. The IRS files a notice of federal tax lien. This is a public document filed at your local county courthouse. It announces to the world that the United States government has a claim against your property. This does not mean they will come and take your house immediately. It means they have attached the debt to the house. If you try to sell your home, the IRS gets paid before you do. If you try to refinance your mortgage to get a lower rate, you will be denied, because no bank wants to be second in line behind the IRS. The lien attaches to everything you own now and everything you acquire in the future. It destroys your creditworthiness. Even though credit bureaus have changed how they report tax liens, lenders still search public records. You will likely be unable to get a car loan, a credit card, or a lease on an apartment. If the debt is significant, the consequences move beyond money and start affecting your freedom of movement. If your tax debt, including penalties and interest, exceeds a certain threshold, around $62,000, the IRS sends a certification to the State Department. Your name is added to a list of individuals with seriously delinquent tax debt. The State Department can then deny your application for a passport. If you already have a passport, they can revoke it. The irony of this entire timeline is that almost all of it is avoidable without paying the full balance immediately. The IRS collection machine is designed to be aggressive, but it is also designed to be pragmatic. Its primary goal is to get you back into the system, not to destroy you. At almost any point in this timeline, before the levy or before the lien, if you simply file the return and set up an installment agreement, the aggressive actions stop. If you can prove financial hardship, you can be placed in currently not collectible status, where the IRS agrees to leave you alone for a while. The system will not forget. The computer does not get tired. The interest never stops compounding. It is a slow, grinding suffocation. It is the loss of your privacy, your cash flow, your credit, and finally, your ability to travel. This is what happens if you stop paying taxes. Thanks for watching. If you found this valuable, smash that like button, subscribe for more content like this, and hit the bell so YouTube actually shows you my next video.